property market has changed. It's changed massively. Offices are now a risky bet. Retail is still getting punched all over the place and struggling to recover. Industrial has probably capped out. And governments keep adding more and more red tape for residential landlords. Property no longer looks like a safe, steady investment anymore. Perhaps it never was, but the returns just don't match the risk at the moment. So where would you invest to get a fair return for that risk? I'm Shane Fleming. I've been involved in the real estate industry for over 20 years, as well as startups. And I don't believe the standard buy-to-let formula works for many people anymore. In this video, I'm going to cover off 3 alternative real estate investments worth watching out for at the moment. Ones that balance risk and reward, and where big funds haven't yet all piled in. And they all meet 3 certain criteria. There's a growth in demand, they're underinvested by large funds, and there's strong opportunities there for operator growth potential. I will also discuss towards the end of this video how new technology might actually finally open up some of these opportunities for small investors like you and me. Right now, yields in offices just don't make sense. Vacancy rates are high and rental growth is kind of flat or is falling. Retail is still getting a lot of punches from online shopping, and industrial and warehouses and logistics have been very hot over the last number of years, but the yields and the rents seem to be plateauing and they've perhaps maxed out. Residential is still very strong in terms of demand. Everyone needs somewhere to live, but a lot of institutional money has moved in heavily to build for rent, and the government have been tightening legislation around tenant occupation and making it harder and harder for residential landlords, particularly small residential landlords. So where can we invest? It isn't overcrowded, still offers some yield, and perhaps just maybe has some growth ahead of it in the near future. This is not investment advice. This is just purely my view of where I'm thinking over the next few years. Let's look at 3 different categories that all share something in common. They have strong user demand, they are dependent on location and operator, and they're largely under the radar of many large institutional investors. First off, activity-based accommodation. Think glamping, but at scale. Not the one-off Airbnbs in the middle of nowhere. Those days are over. They're not scalable from an operational point of view or an investable point of view. I'm talking about operators that run multiple unique sites with perhaps 30 or 40 units per location, like wellness retreats, surfing lodges, hiking pods, professionally managed with the consistency of a hotel but the experience of an adventure. COVID did prove that people want that experience and not just a room. Those small independent Airbnbs were like MVPs. They proved that there was a minimal viable product there, and it showed that there was real demand. But now the market is maturing and moving on, and that is becoming quite evident, and soon there will be brands that will be able to do this at scale. Even think of companies like Equinox, the fitness brand. They're moving into the wellness resort space. And we're at a very early stage of this industry. Think about where the hotel industry was perhaps in the 50s and 60s, where most hotels were family-ran hotels before the likes of the Hiltons, the Holiday Inns and the Marriotts all turned those kind of local inns into global brands, which allowed institutional funds and capital to invest into it at scale, raising the value of those properties. The global glamping market is worth about 3.45 billion as of last year. That's projected to hit about 6.18 billion by 2030. That growth rate is around 10% per year, and we're still at the very early stages of this, and big funds and big institutions haven't yet jumped into it. But when brands start to actually become commonplace, institutional money will start to move in, and they will push up the values of these properties pretty dramatically. For small investors now, the opportunity is where you can find strong operators that can actually scale, that pick locations that have repeat tourism from an appeal point of view, and they attract the hiking, the surfing, the wellness, the eco-retreat kind of tourists. These properties can be targeted now before institutional capital starts to drive down some of the yields, and you can get better return on your money right now. The next opportunity that I want to talk about is very similar. It's also focused on location and growth of user base. And the operator forms a very key element to the investment decision-making process. And that is sports-based operators and facilities. I'm not talking about your local gym. I'm talking about something that'll be more focused on a niche sport within a particular area, where there's massive user kind of growth. Think about pickleball and paddleball. They're the ones that stand out for me at the moment. Pickleball has been the fastest growing sport in the US for the last 4 years consecutively. It's now reaching over 36 million players, and the global market is projected to hit about 9 billion by 2034. That's up from about 2 billion now. So we're looking at a growth rate of about 15% per year. And these are really easy to create and grow. Also, you have things like D1 training in the US, where sports trading franchises are growing. You have growth rates up around the 270%, where revenue is growing for the last 3 years. They're growing from about 150 locations to about 250 locations over the next year or two. And this is because parents are paying for customized coaching for their kids, for little athletes to be developed into certain sports stars. And this is growing all the time. These type of sports models don't actually need a high-end construction like an office block or a hotel would need. It doesn't need that 100 million, 200 million investment of capital, because a lot of times they can go in and repurpose an industrial unit or a retail unit. And they're generally like community-based locations led by good operators, and they have multiple revenue streams from membership, coaching, and also tournaments coming up as well. And as an investor, you're not just buying into the building for the building's sake, you're also trying to invest into the business as well, into an economy, in terms of a sports economy, that's growing really, really fast. The third opportunity is one that I've been watching out for a while, very closely. It's something I'm not 100% on, but the figures tell me otherwise. And that is membership clubs, particularly membership clubs that are repurposing old office blocks or retail centres, particularly in high populated areas. There has been a lot of talk in recent years about converting old offices into apartments, but that isn't always going to stack up. But instead, what I'm actually seeing is this kind of hybrid of this third place that people are talking about, where clubs for families and professionals are starting to pop up. And it's something in between kind of home and work. And it's particularly required more and more as people work from home more and more. These are popping up across the US, Europe, and these spaces are where people can kind of come and work. They can bring their kids to play, they can exercise, they can meet other people or other like-minded people, they can grab a coffee, all under one roof. And this is the kind of evolution of a co-working space. It's that step beyond kind of WeWork, but for families. Personally, I found this hard to see this business model actually working, but the figures are proving me wrong. Membership often sell out before the building even opens, especially in urban areas with high income or even suburban areas with high income families. And as a parent, I'm kind of beginning to get it. Finding that space that works for every member of your family isn't easy. And these clubs kind of solve it. Like the golf club doesn't solve it, the tennis club doesn't solve that. But this type of facility that everyone in the family can use and operate in or designate as their third space seems to solve that problem, and they're growing all the time. The investment opportunity here comes from converting some unused retail or office space and partnering with membership based operators to generate a kind of steady subscription style income. All three sectors, the activity stay space, the sports facilities and the membership clubs, are hard for small individual investors to get direct access to invest in them right now. But that's the same with trying to invest in a large hotel or trying to invest in a large office block. However, the capital requirements for these are smaller, therefore it is more attractive to take on smaller investors into these types of deals. And that's going to change even faster with the likes of real world asset investing, RWA investing, with tokenization of real estate on the blockchain, where this tech is going to allow smaller stakes and smaller investors invest in global projects, because it's going to improve transparency and it's also going to make it easier for people to buy in and buy out of these. It's kind of like imagining owning 1% of a wellness resort or 2% of a padel facility or a small percentage in a family membership club, all verified and managed through the blockchain and all through one portfolio, your own portfolio that you're managing. And this unlocks a lot of real estate investment, I think, from a global point of view, from a diversity point of view, and also creates real yield, as well as lowers the barriers of entry as well. The next generation of property portfolios or portfolio builders won't just be buying your single buy-to-let property and putting it in a portfolio. It will be fractionalized ownership of larger assets across the hospitality sector, the sports sector, community real estate, all tokenized in a transparent and in yield generating wallets or vaults that will be generating yield from across the world. And that is what's going to be your new real estate professional investor. They're going to source out those type of deals. So if you were to invest in any of these type of opportunities, from a wellness resort or something along those lines, or a sports complex or a membership club, which one would you pick first off? Let me know in the comments below. Let me know if you found any of this useful and what you think the future of real estate investment is going to look like in the future. Also, make sure you subscribe to the channel for more insight in terms of real estate, the economy, and how tech might actually shape or reshape both.